Hello, hello. Welcome to the first edition here where we're streaming our daily reports. I'm going to talk through some of the names that we find on our day-to-day reports here that we send out every morning at 7 a.m. If you're interested in getting these reports prior to the video, I highly encourage you to click on the link in the description. Sign up below. It's free. It's the newsletter. Once again, every day, 7 a.m., I send out a different scan highlighting different areas of the market that are showing strength during times of strength and weakness during times of weakness. Stay on the side of the trend, right? First things first, thank you for the opportunity to be able to speak with you today. I'm going to go through what the actual report said. So for those of you that are coming over from the newsletter itself, I appreciate you taking the time out of your day to watch this. For those of you that have never seen it before, this is what it looks like. This is what it looks like when it's posted on our market research portal. The report is free. The trades within the report are obviously not free, but we're going to talk about a bunch of these names today. Give me about 15 minutes and we'll talk through them. First things first, what we're looking for here is this is one of my favorite reports that we put out. It's a blend of William O'Neill's classic can slim strategy where he's looking for stocks that are showing awesome fundamentals. Now, inside of the trading initiative, we don't necessarily focus too much on fundamentals. As a matter of fact, we don't focus at all on fundamentals. But history has proven that William O'Neill and his can slim method has had a very high success rate when marrying technical analysis with his fundamental analysis. And this particular scan does that. It takes the technicals of the trading initiative, the types of setups that we like, the volume requirements that we have, some of the intangibles such as must have an options chain, must be shortable, things like that. And then we sort them from 52-week highs, whatever's closest at pre-market. Generally, what floats to the top here are the strongest stocks showing both the can slim fundamental side plus our technicals. And what we get is a list of, usually, I cut it off at 30, but these lists go on forever, 30 of the top names that fit that specific part of the market. Once again, companies that are showing great fundamentals and technicals. If you've been trading the market, you can probably recognize a few of these names off of the list. They're names that are going absolutely insane, and that's the whole point. We want names, particularly in bull markets, that are showing the greatest strength. One thing I will point out is that if you do join the newsletter, once again, free description below, or if you're already on the newsletter, you're going to notice that week over week, some of these names remain on the same list. That is a feature, not a bug. That shows that we are focused on the strongest stocks within this specific part of the market. We want to see repeats. The idea is to identify the leaders within this subsection of the market and own them for as long as it makes sense to own them. So here's the list as of today. You can look through different industry groups, companies, tickers, market caps by the billions and percentage away from 52-week highs. We have some new yearly highs here on Monday and Robinhood as of this morning. Eli Lilly. A very diversified group of industries in here as well. It's not just software, which is what most people would expect when we're talking growth names. But it's not. We have some aerospace and defense names. We have some copper names. A very diverse type of scan, and that's why I like it. So if we flip back over to TradingView, over the next 10 or so minutes, I just kind of want to go through some of the names that stood out to us, to me in particular this morning, names that we're currently already inside of TTI. We'll kind of talk through the process on why we liked it, when we liked it, and what we're expecting out of the move. And then some of the names that stand out as potential new trades. And as you can see on the right here, not all of them are performing well today. Today's kind of a low volume environment. Market's waiting for minutes. I think they come out at 2 p.m. Eastern Standard Time. And then we have NVIDIA earnings. And then obviously next Monday we have Labor Day. So it's going to be a low volume type of end of week here, as most people are going to be taking that Friday off to have an extended 4-day weekend. We're just going to sort through by strength and go from the strongest to the weakest here. Once again, all of these trades are going to be from the report earlier today. BZ, this is going to be a mid-cap software name in the Chinese sector. We liked this. This went out as a report. This specific setup came out, I believe, 2 weeks ago. We looked through only international stocks that were showing strength with a focus on Chinese stocks. Obviously, the narrative here within China, And the Chinese sector in particular it's doing really well over the last few weeks. And we're wondering if finally Chinese stocks have turned a corner. Well, BZ has been on the list for multiple weeks in a row, and we were able to officially grab it at around the $20 pivot spot. So we're currently in this. It's a shares only trade. We're expecting a move up to about 25. This is a completely free position for everybody that grabbed it off of the pivot. It's currently up about 9 to 10% right now, which is about a 3x ADR move. So this should be a free trade, meaning we've moved stops up to break even and potentially might be looking to move stops up into profit relatively soon here. Nice little setup coming off of an extended consolidation fractal. Once again, if the Chinese theme really starts heating up, we would expect more of these types of charts to show up on the scans. As of right now, BZ is working on the right side of earnings report, which is great. Bullish momentum regime, rising 200-day moving average. Nice little setup here on BZ. Number 2, we're also currently already in SEM Rush. I don't know about any of you guys, but I have experience working with some online marketing tools. Not my favorite part of being a business owner, I might add. But it was wild for me to see this particular software as a service company valued at over $2 billion. I just didn't expect it. But once again, a very basic setup, right? We opened above the 14.5 pivot. We like this all the way up to $19. This is your classic stage 2 breakout. For any of you guys that like the Stan Weinstein stage analysis cycles or your Richard Wyckoff market cycles, this is just a classic accumulation into a markup period, right? Your stage 1 into a stage 2. We like this name. It showed decent bullish momentum going back, but there's been obviously some pullbacks to the 200-day moving average, so we can't call this a bullish momentum regime. We like to buy when stocks are above the 50 RSI, and the closer they are to 70 and overbought, the better. For us, that's momentum. We're on the right side of earnings, up and over the 14.5 and a new 2-year highs, 4.23 ADR. Right, so this moves a little bit quicker than some of the other trades that we normally take. This is a mid-cap software name, $2.35 billion. We like it up to 19 currently right now. This should be nearing a free trade. If we shift-click up, we'll see we're up about 12%, which is a 3x ADR move. That's generally when we start moving our stops up to turn these things free and potentially might be looking to pull some profit off of this relatively soon, meaning just moving stops up. So if we do end up getting stopped out and we don't hit our price target at 19, we're still going to pull some cash out of this move. We risked it. We got the move that we're expecting. We might as well get paid for it. So BZ and SEM are off to hot starts here. We like both of these trades. Both of them could not be farther apart in terms of sectors, though. One, China, which moves independently a lot of the times from the U.S. domestic markets. And then we have a U.S. domestic mid-cap software name. Number 3 is TW, TradeWeb Markets. Now, this is a name that we didn't grab. We had officially charted it that we wanted it. We didn't grab it. So I'm not afraid to sit here and talk to you guys about this really nice little setup. And I want to just point out, you're not going to grab everything. I was just reading before I hopped on a post from somebody that was like, I really wish I grabbed First Solar. I really wish I grabbed a bunch of these other names that are really running right now. And if you're looking at First Solar, I'll pop over to it really quick. This is a huge move in First Solar. This is a solar name, obviously, a big component of the TAN industry group, your solar industry group. And look at the moves over the last 2 days. Shift click up here. You can see that we're up nearly 20% in 2 days off of a 3.7 ADR. This is a semiconductor stock that has exposure into the solar industry as well. So this has just been a phenomenal opportunity for anybody that was able to grab it. We did not grab it. This was not on our radar, unfortunately, until today, which it's too far extended to try to chase this. TW at the time was kind of the same thing. We were noticing that we were up and over the pivot spot at 102. This is an investment bank / broker name, $26 billion market cap. We like financial stocks here. We're long a bunch of financial stocks, and they're doing very well for us. So this was naturally part of the stock selection process that we wanted. We like this nice little flag on the right-hand side of an uptrend here. If you want to call this kind of a broken cup and handle, feel free. We wanted to buy the bull flag breakout, and unfortunately, we just didn't get the opportunity because the stock never pulled back once it started to break out. We like to buy pullbacks. We don't like to chase breakouts. By chasing breakouts, you're really skewing risk to reward against you. We would prefer to stack it more in our favor. So this is one of those missed opportunities. But once again, look at the types of charts that I'm showing you off of this report. Almost every single one is going to be up and to the right, and they're going to have some pretty aggressive slopes, which is what we want to own, but we want to own it at the right level. So as of right now, a missed opportunity in TW. This is a 2.43 ADR. Nice momentum all year. Bullish momentum all year. Actually going back to Q4 of 2023, end of Q3 of 2023. So really just a nice name that we missed, but something that you can look to potentially add in later on if we find ourselves in some sort of consolidation fractal, etc., like we found here. Let's not miss it next time. Next stock is something that we already initiated on, ONON. This is a stock that we opened up last week, footwear and apparel name. I don't know about you guys. I absolutely hate the look of the shoes, but apparently the market loves it because this is up a lot over the last 2 years. So once again, ONON, we liked it above the 36.5. We don't need to reinvent the wheel here, guys. It's a basic consolidation fractal breakout. That's all it is. Bullish momentum going back to the beginning of the year. We have a so-so 200-day moving average. In reality, we'd really like to see this thing slip to the upside. The odds of these breakouts sustaining themselves are just way higher when you have an accommodative 200-day moving average, meaning sloping to the upside, excuse me, and price up and over it. We don't want to be buying things when price is below the 200-day moving average. It typically gets us burned more often than not. 4.05 ADR, and I want you to focus on the VRVP indicator that we use over here. It shows us that there's not a lot of volume over the 36.5 pivot, meaning there's probably not going to be a whole lot of sellers pushing their sell orders into advancing price. So this breakout has a higher chance of actually continuing through and not facing resistance up until at least our price target, we hope, at 44.5. Makes sense to me to be long this name. This was an options trade and a shares trade as of right now. It's working okay. We're going to see if it continues here. Retail getting hit a little bit today. Target down like 8% this morning off of some bad guidance and some earnings stuff. Meanwhile, Costco and Walmart are at all-time highs. Apparel and footwear seems to be doing okay. We're going to see Abercrombie & Fitch in a second. We'll see if ONON continues to follow through. KKR, this is another monster name. So this is not one of the mid-cap names. This is a large cap, $94.5 billion investment manager name. Now, we opened this thing back in November or December of last year. You can see that we bought the all-time high breakout. We originally targeted near the $100 area, and we got it. It was a little bit slower of a trade. It was a nice trade, though. Multiple 100% winner. It just took a little bit of grit kind of sitting through some of the consolidation around here. It can always kind of make you feel uneasy if the stock that's advancing super quickly stops and right in its tracks and starts consolidating. The options premium can really start to dwindle down a little bit and you lose confidence in the trade. But if you continue to wait as long as the trend is up and there's no reason to sell, generally, you're going to get a favorable outcome. And we did. We were able to sell a majority of our position into the 100 area price target. What we're looking at here now is there was another entry available at above the 100, like the 102, just buying the continuation fractal. We were unable to actually nail that. There's a lot of stuff going on. We have a lot of positions on the books right now that we're looking to, and KKR just kind of fell through the cracks. But what I do like about KKR is I do think there's going to be an opportunity here at the 110 area to potentially add in or start a new position. Reason why is because these Fibonacci levels that I'm using, I'm not the only one using. Market participants use these all the time, and this is a very obvious range to place an extension across. And so everybody's going to be looking at the 110 area. When generally everybody's looking at the 110 area, there's self-fulfilling prophecy that comes in. People want to sell into this very logical level. I wouldn't be surprised to see KKR come up, consolidate a little bit, maybe drop down. But as soon as it breaks back up and over that 110 area, we're going to want to continue to be long KKR with new position here, which also gives us an advantage because if you're trading options, this consolidation is going to give you an opportunity to buy cheaper contracts when it eventually breaks back out, obviously, because premium is going to be drawn down. So KKR, there's going to be a good opportunity there at 110, just not yet. Eli Lilly might be the most monster chart that I have seen going back 2+ years. This has been on our watch list every single time we pull up any sort of relative strength, absolute strength scan. And for one reason or the other, we're always like, there's something else in the market going on. Maybe we should own this. Healthcare's not doing that great. Probability states maybe Eli Lilly is going to have a hard time going up as fast as other areas of the market. Eli Lilly has told us we're wrong. And so as of right now, we have not taken advantage of Eli Lilly nearly as much as we should have. You can see that there's been multiple opportunities to get long through consolidation fractals. And this is just classic stuff. When we look back in 10, 15, 20 years, this is going to be in any sort of chart book. I mean, you're going to have this thing all marked up, opportunity to add here, opportunity to add here. This is just like TA 101, but it's hard getting yourself to buy this type of stuff when it's already extended this much. Unfortunately, that's a hallmark sign of a very good trader, not being afraid of buying into strength, understanding that momentum tends to beget momentum, and these things go a lot higher than what most people expect. And that's kind of what we're doing here with Eli Lilly. So we do have a trade idea out for Eli Lilly. This is part of the report today. I'm not going to sit here and tell you the price targets and the stop outs, but what I will say is we like to risk the horizontal level break. Obviously, we're that type of trading group. It's an obvious area of where you're right and where you're wrong, right? Something above 790 or 800 and it continues to go up, you're probably right. fall back within the range, you're probably not right, at least not right yet. So you might want to cut that. This is an opportunity finally to get long at a logical level in Eli Lilly. It's an expensive trade. There's called debit spreads out there on the options chain that will help you to reduce costs if you don't want to pay $2,000, $3,000, $4,000, $5,000 per contract. I think the called debit spreads are going for like anywhere between $400 to $600, but you can find 4, 5, 6 to 1 setups if you want to, depending on how far you want to go out and where your strikes and price targets are. Eli Lilly, though, an opportunity finally to add into strength after a 3-month consolidation. Almost done here, guys. Abercrombie & Fitch, another monster chart, just like Eli Lilly. We're going to come back and look at this a few years from now and go, why the hell didn't we buy this sooner? We had an original idea at 48, and although it's on the list, guys, I'm going to tell you we didn't buy the 48. I wish I could tell you we did. But there is an opportunity to potentially buy it on a pullback to the 140 area, 137 area. This little spot here has a little bit of volume. Shows that it's an important price level as we've come up and tapped it multiple times and finally flipped it. If there's an opportunity to own Abercrombie & Fitch on a continuation fractal, it's probably going to be on a pullback to this level. We're actively looking at this. I said earlier that Target is down a lot. Walmart and Costco, at least prior to hopping on here, were up into all-time highs, both of them. But kind of apparel and retail are mixed right now. Some of them are pressing up, some of them are coming down. If Abercrombie & Fitch comes down to that 137 level, particularly for a shares trade because earnings are coming up, this might be an opportunity to add into one of the biggest growth stories going back a year. This is one of the best performing stocks within this specific part of the market. We might be able to own it at 140 or 137 on a pullback prior to ER, and who knows what happens then. As long as you can manage risk here, it's not a bad opportunity, but we are waiting for a deeper pullback. Nubank, a position that we've already opened up. I really like the story here on Nubank from a technical standpoint. Rising 200-day moving average. We have 3.29 ADR, and up until just the last few weeks, very, very bullish momentum going all the way back to like the beginning of 2023. I really like this because it hits two specific areas of the market that we like right now: emerging markets and fintech/financials. Financials are leading the way. They're up at all-time highs. And you have names like JP Morgan that, although they did pop down because of the Jamie Dimon comments recently, right back up near all-time highs already. We have banks breaking out into new 52-week highs. Some of them are up into all-time highs. Things like Wells Fargo, Bank of America's breaking out, Charles Schwab's breaking out, Citigroup's breaking out. All of these names are breaking out. Nubank has that exposure. Nubank also has emerging markets exposure, which obviously, if you've read the reports over the last few weeks, emerging markets are breaking out along with China, right? So Nubank gives us exposure in emerging markets and financials. And I like this as it's building a consolidation fractal up and over a previous all-time high at 11.5. Some guys are going to look at this and go, this is a boring trade. I look at this and I think there's an incredible amount of opportunity here as the market digests the last two ER events into all-time high. This does not look bearish to me whatsoever. Once again, the 200-day moving average is sloped up. We have high ADR. We have no volume over this because we're at all-time highs. We like the big blue sky setups. I would assume that this resolves to the upside because primary uptrends tend to resolve through consolidation fractals in the direction of the primary trend. This gives you an opportunity to build risk into the trade by using anything like a descending trend line or just the horizontal level at 11.5. Good little setup here on Nubank, and it's relatively cheap on the options chain. We already have a position. RCL, we already have a position as well. Consumer discretionary name. This is going to be a lot bigger of a stock. $40 billion leisure, hotel, resort, and cruise stock. We like this above 135. We were shaken out earlier this year, but we were able to get back long. Very basic setup. Long above 135. Target 190 to 205. Stop out if you're below. Previous fractal low at 125, 126, 127. So far, we're getting the break. So although we got stopped out earlier the year due to this little pullback here, we got long again at the end of April, and so far it's working for us. So another stock here that is into all-time highs and showing us the initial push. Two more here, and then I'm going to hop off. Robinhood has been really good to us all year. We were initially able to grab it off of the stage 2 breakout at 13.5. This has been a big win for us. For those of us that are still holding the August $20 calls, this is a 400 to 500% winner for us, so congrats to that. We added into some September 23s down here on the pullback. Once again, it's just a logical level, 17.5. That was our original price target. We pulled back into it, consolidated. We decided to deploy more capital, and that ended up being the right call. New positions are up anywhere between 100 to 200%, so this is now a completely free position for us, and we have lots of time on it, right? So this is another one of those growth stories. If you can hold on to this stuff, it's rather volatile at 6.13 ADR. If you can bake that into your trading expectation and not get shaken out on every pullback and understand that levels matter more than percentages if you're trading high ADR names, particularly if you're trading options with, far out expirations, don't get shaken out intraday from a swing trading perspective, guys. It's going to work against you. Bullish momentum, rising 200-day moving average, stage 2 breakout. Stan Weinstein would be screaming at you, don't sell this goddamn thing, and we're going to tell you the same thing. Don't sell this goddamn thing. Not yet. Try to get long here on any sort of consolidation fractal. Our next entry point is going to be somewhere up near the 23 area, which would give us another opportunity to add in on any sort of pullback. Don't know if we get it. As of right now, we have 2 trades in this, both up big, both free. Last one I want to talk about right now is HBM. So when the report came out earlier today, this was sitting around 10. Now it's currently down because metals are down today. But this is another one of those big, long metal base or big, long, decade-long base breakouts in a metals name. We had one on the report yesterday as well. I'm not going to go through it because it was just a trade idea for TTI, but it was a decade-long metals name breakout. This is another one, HBM. This is a Canadian name. So I believe the other one was a Latin American name. This one is a Canadian name. We like this above $10. Unless we close above $10, we don't want to be opening up any exposure in here. It's kind of how we roll inside of TTI. We want to own things above certain price points, not try to front run this stuff, because if you get caught in a pullback like this, you're just sitting in a disadvantageous entry point, because if it never ends up breaking out, you're caught underneath overhead supply, and it just becomes a very difficult and uncomfortable trade, even if it ends up working in the long term. It's just a bad entry, right? So we want to wait for the $10 area close and then potentially buy a pullback into that $10 area on a high volume breakout or something like that. As of right now, this is on our watch list. We like this thing. Once again, it's almost a decade-long high breakout in an area of the market that up until today was doing really well. No idea if this copper pullback and this metals and mining pullback continues to evolve into something bigger, or if it's strictly just day-to-day volatility. I have no idea. But HBM above $10, and we're going to be looking to buy this thing. Guys, my name is Hamilton. I'm here with the Trading Initiative. Once again, if you like this type of content, please like and subscribe if you're interested in getting these every single day. Link is in the description below. It's free. I send them out at 7 a.m. Eastern Standard Time. Different scan every day, along with my thoughts on the market for the day and kind of a final say. And if you'd like the trade ideas that we're talking through, including all of the entry, stops, take profits, options, and everything else, webinars, courses, etc., link is in the description below. And in all of the emails. Our market research portal is available for purchase if you'd like that. Thank you so much for the opportunity to speak with you, and I'll talk to you later.